Hi, I'm Professor Zubair Jahangir, and in this video I will be telling you about swap ratio, where you will understand the concept in complete detail. First, swap ratio is a very important and integral part when there is a mergers, amalgamation, takeovers, demergers, etc. And more importantly, it also comes in your exams. So we will understand this from practical oriented part as well. So first we will see that HDFC and HDFC Bank merger. Here the swap ratio was that 42 shares of HDFC Bank will be issued for holding 25 shares in HDFC Limited. Let's understand this. First we'll see how it goes in practical world. So first let me tell you the transaction, that there was HDFC Limited, which was the holding company. It was the parent company. And we had the subsidiary HDFC Bank. Okay, HDFC Bank, which was the subsidiary. Now, what happened is they realized that HDFC Bank has a much greater prospects, and they wanted to merge all the assets and all the resources of HDFC Limited into the subsidiary. So imagine if I feel that I had set up a big company and multiple subsidiaries were there, but then I realized that the subsidiary has so much potential. Let's fund all our money and resources in this only. So that happened. So the HDFC Limited was a bigger company. Okay, so this was the background. Now let's look at the swap ratio. What was there? That 42 shares of HDFC Bank will be issued, okay, for 25 shares of HDFC Limited. So if you were holding 25 shares here, 25 shares in HDFC Limited, 42 shares will be given in exchange. So if you were HDFC Limited shareholder, you had 25 shares in the company now, because HDFC Limited was shut down. Okay, all the business was shut down. So if I was a shareholder of HDFC Limited, I was panicking. What will happen to my shares? They said, don't worry, you will get 42 shares of the HDFC Bank. Okay, so this was the ratio. Now another example. Before explaining the concept, I'm taking you through some practical real life examples. Now in Reliance acquisition of Just Dial, when Reliance acquired Just Dial, can you tell me how many shares were given by, and obviously Reliance was the acquirer. They had acquired Just Dial. So Just Dial was the target company. Make a guess how many shares were issued by Reliance to the shareholders of Just Dial. See, imagine I was Just Dial shareholder example. My company got taken over by Reliance. So my shares got taken over. So I'm wondering, what do I get in return? So how many shares of Reliance I will get? The answer was 0. How many? 0 shares were given. Sir, why 0? Because Reliance said that I'm not giving you my shares. I'm giving you a cash. It was an all cash deal. 100% cash was paid off to the shareholders of Just Dial. So when I was a shareholder, I gave my shares of Just Dial. In return, I got cash. Done. Now, another example was of Facebook. When Facebook acquired WhatsApp. Now, when Facebook acquired WhatsApp, it was approximately a 19 billion deal. So, out of the 19 billion, okay, Facebook had to pay 19 billion to the shareholders of WhatsApp. Now, how did they pay? They paid 15 billion dollars in shares, and balance amount, that was your approximate 4 billion dollars, was paid in cash. So what happens here, when Facebook acquired the shares and the entire company of WhatsApp to the shareholders of WhatsApp, they gave cash 4 billion and 5 billion worth shares of Facebook. So if I was a shareholder of WhatsApp, I'm wondering what am I going to get? So I got cash and I got shares of Facebook in return. Next example we go to see when Tata's acquired Ford, Jaguar and Land Rover. How many shares were given to the shareholders of Jaguar and Land Rover? Answer is 0 shares were given. Sir, why? Obviously because the acquirer company will decide whether they want to give shares or they want to give your cash or they want to give a mixture of both. So it was 100% cash deal. It was 100% cash deal. So no shares were given of Tata's. Instead, they said take the money and leave. Give us your shares. You take the money and you leave. So then we understand that whenever mergers and amalgamation is there is a concept of purchase consideration involved. So what is purchase consideration? That when the acquirer is purchasing the target company shares, they have to give something in return. That something in return is called as purchase consideration. That when we purchase, how much money are we giving? So purchase consideration will be paid always by whom? Is a value payable by the acquiring company. And to whom we'll pay? We'll pay to the shareholders of the target company or the transferor company, because they are giving their shares in return. What are we giving them? We can give them a cash, we can give them equity shares, or we can give a combination. All three examples I have given you. So for example, if we go to see, when we took the example of Reliance acquiring Just Dial, it was a cash deal. When we saw HDFC Bank and HDFC Limited, it was an exchange of shares. And combination, are given an example of Facebook acquiring WhatsApp. So always very simple, the acquirer has to give something to the shareholders of the target company. That is called as purchase consideration. Either I give them shares, money, or both. Now we understand and dwell into the concept of swap ratio. Okay, first we will see the formula, then I will tell you the entire logic. You don't need to learn the formula at all, it's completely logical. Okay, so swap ratio is calculated by the value of the transferor company divided by the value of the issuing company. Means I will see that the transferor company, the target company, the demerging company, the seller company details I will put on the top, and then I will put all the details of the acquirer, buyer or the issuing company at the bottom. Then we will come to know that the issuing company, how many shares he has to issue to the target company shareholders. Clear? So first we'll just see the definition, then I'll explain you with pure proper logic. Swap ratio means the number of equity shares. Who will issue? Obviously the acquirer will issue to the shareholders of the target company. So the number of equity shares that the issuing company will issue to the shareholders of the target. Okay. Now let's understand the formula. Okay. First you've understood, in short, if you have to always remember, you can remember it is always target upon acquirer. It is always target upon acquirer. This is a simple little shortcut you can remember, target upon acquirer, and you'll get the swap ratio. But I'll explain you through proper logic where you never have to remember this ever again. Okay. Now pay attention that if I am the acquirer and you are the target company, okay, so I acquire your full company, I take away all your shares, and you will say, na, in return what you will give me, how many shares. So first thing is, if it is a pure cash deal, I pay you cash and I leave it, swap ratio is never calculated. Why should I calculate swap ratio? Is it only when shares are given against shares, that is when we have to find the value of two companies and then swap ratio will be done. For cash deals, we never calculate because he's just giving cash and he's telling us to leave. Transfer of shares, it's like a sale of shares and it gets over. When shares are exchanged against shares, then we have to see what are the sizes of the two companies. So let's say on top, I put the value of the transferor company, target company, demerging company or the seller company. So let's say the value is 50 crores. Let's say we'll take first one, a very simple example, that the value of the target company is 100 crores and the value of the acquirer, okay, acquirer is here and the target, okay, is here. The value is same. So if you were a shareholder of the target company, we come to know the size is 1:1, means both are equal sized company. So if you were holding shares, one share in target, you will get one share in acquirer. Common sense. And this was a example of Reliance and Jio demerger case where 1:1 ratio was given. That means if you are holding one share in Reliance, you will get one share in Jio. So when the sizes are equal, Now let's take another example. This was one where it was same. So whatever shares you were holding in the target, you will get one share in the acquiring company. Now let's take what if it's a different sized company. Mostly, obviously, it cannot be exactly equal. So let's say the target company was 50 crores, target company, and the value of the acquirer was 100 crores. So this value can be computed on basis of market value, intrinsic value, book value, earnings, etc. Whichever matrix is there, both will be same. You will put one up down to understand the sizes of the company. Once I came to know the size is same, then the swap ratio will be 1:1. But when the size is not same, we will see what is the swap ratio. So when you divide this, 50 ones are 50, 52s are, so 1/2, which means 0.5 upon 1. Right? What does this 0.5 upon 1 mean? What does this 0.5? This is the swap ratio is 0.5. First, before interpreting, let me tell you how I look at it. Very important to understand. I know that the acquirer is always down, issuing company is at the bottom. So I know that the target company is smaller in size. The target company is smaller in size, obviously because it is less than 1. If it is 1, it is exactly same. If it is greater than 1, it is bigger company than the acquirer or the issuing company. So, and obviously we know that this is smaller company, this is the bigger company. So the swap ratio came 0.5:1. Now let's understand how do we interpret this. How do we interpret? It means that always this is the standard line, okay? This is the standard line. What we found out the swap ratio? Swap ratio is 0.5:1. If someone tells me I understand that the target is smaller in size, this line you need to learn. This line I want you to note it down. A swap ratio of X, this is the swap ratio, means that the issuing company will issue X shares for every one share held in the transferor company. Now my question is, who will issue the shares to whom? Issuing company, acquirer company will issue shares to the target company. We will issue to the shareholders of the target company, right? So how many shares will we issue? So we will issue 0.5 shares. So whatever swap ratio you catch, you have to put it here in this line. We will issue, the issuing company will issue 0.5 shares for every one share held in the target company. For every one share held in the transferor or the target company. Okay, target company. So common sense. Now understand what is the logic. You were holding one share in what? In the target company. You are wondering how much I'll get in the issuing company. Obviously you are small in size, so we will issue 0.5 shares for every one share held in target. So this line is always same for every one equity share held in the target company. Concept clear? For every one share that you held in target, here you will get the swap ratio amount. You will get 0.5 shares. Common sense. Why? Because you had one share there. Now the holding, the target, the acquirer company, issuing company is bigger in size. It is bigger in size now. So obviously what will happen is bigger in size. So we will issue less number of shares to you. Okay. So one share you were holding. So here you will get 0.5 shares. So this line you will learn. I'll explain it as we come forward. So this ratio you come to know, then they will tell you that we were holding so many shares in the target company. So then you'll just multiply with the swap ratio. Simple. So if you were in the target company, the ratio was 0.5. For every one share that you were holding there, we will issue you 0.5. So shares held. So then I'll ask you, how many shares were you holding there? So you'll say I'm holding 3000 shares in the target. So now in the issuing company will issue you 0.5 into 3000. Okay, half the number of shares you will get. So you will get 1500 shares of issuing company. You will get for 3000 shares held in target. Okay, so the flow of writing this will be same. A swap ratio of whatever, when you calculate, you will write of 0.5 means that the transferee, acquirer, because we are the issuing company, right? So write the same thing, that the issuing company will issue that many shares for every one share held in the target company. Clear? So we will issue this. Now, the value, when we compare the value of the companies, you can calculate on basis of market value, earnings, book value, net asset value, any other valuation matrix can be taken. Why? Because one is, when we have to calculate the swap ratio, we have to calculate the value of companies, value of always the target upon value of acquirer. Okay, so this value can be calculated on basis of market value, book value. So both will be like this, and we come to know the sizes. So whenever I see a size of 0.8:1, that means the target is smaller. So pay attention to this, because the understanding of what does the swap ratio mean is also very important. It means when I look at this, I come to know that the target company is 80% size of the issuing of the acquirer. I come to know that this is smaller. If this is 0.9:1 means what? That the target company is 90% size of the acquirer. Means if this is 1, you are 9.90. Simple. So then we will see that if you are holding one share there, you will get 0.9 shares of the company. So simple line I have made, and I will explain it also as we go. Let's look at some practical examples. Okay, when HDFC Bank and this merger was there, so whenever you come to know it's 42:25 means you'll divide it just to get the exact point. Okay, so here when I say swap ratio is 42/25, so what you'll do, 42/25. Okay, so 42 divided by 25. Okay, it was 1.8. That means always the HDFC Bank, HDFC Limited divided by HDFC Bank. Okay, why did we put bank down? Because it was the issuing company. Okay, and this were the transferor company. So they were transferring their shares, transferor company. So when I see a ratio of 1.68:1, so here I automatically understand that the target was bigger. The target was bigger. 1.68 now is greater than 1. So how will we frame the sentence? It's very simple. It's very, very simple. That who will issue first? Always the denominator company will issue. So the issuing company, acquiring company will issue 1.68 shares for every one share held in the target company. So if you had one share in the target, we will issue you 1.68. Well, we are smaller, we are giving you more number of shares. Okay, so this line you have to learn exactly right, that a swap ratio of 1.8 means that the issuing company will issue 1.8 equity shares for every one share held in the target company. Similarly, when we saw Axis Bank, now Axis Bank is 1:575. So it was 1 divided by 575. So that means the swap ratio is 0.0017. So 0.001739:1 means the target company was really small as compared to the issuing company. So the target company will issue 0.001739 shares for every one share held in the target company. So what you are holding one, we will issue you this many shares. So they had put it in a more better ratio, that means that the issuing company will issue one equity shares for every 575 shares held. So you are holding 575 shares, then we will issue you one, because we were really big. Now when we see Reliance and Jio was a demerger case. Okay, so then they said that in demerger what happens, Reliance Industry was there, they were having many units, they were also having Jio, they split Jio, okay, and Jio was a separate company. So obviously this is called as the demerged company. So the company that is cut is called as demerged, and this company will be called as the resultant company. Okay, so obviously it was split. So now question came that if I was a shareholder of Reliance Industries, let's say I was holding 300 shares of Reliance, so I'm wondering how many shares of the new company I will get. So the ratio was 1:1. So if I was holding 300 shares of Reliance, Jio will issue me 300 shares. So that is how many shares will be issued. Okay, because one part of it was done. Similarly, 4:5. So you have to break it down. Okay, 4 divided by 5 means the ratio is 0.8:1. Means what? This is the target company size. This is the acquirer's size. The target is small. So how will we frame the sentence? That the issuing company, always a denominator company, will issue 0.8 shares of issuing company shares for every one share that you held in the target, because it makes logical sense, right? I'm a bigger company, so for every one share that you held, I will give you 0.8 shares of the issuing company. Similarly, these shares were there for Kotak, etc. was given. Okay, Reliance, Just Dial, it was a swap ratio was not applicable in Reliance and Just Dial because it was a cash deal. Now let's look at some sums which are there. Now I told you the value of target divided by value of acquirer. Normally acquire will be called as the issuing company, and this will be called as the transferor company. Okay, always. So here we are calculating the swap ratio. Now very simple. Now the value can be calculated on multiple matrix. So here we will see what they have given you. So the amalgamation was considering the book value method. You open the books, whatever is there, you don't look at the market price. So we will go here, and if nothing is mentioned, we'll see. Okay, so company A is there, its book value is 10 million, and company B is there, its value is given as 15 million. So normally the smaller size, if they not mention anything, then the smaller size company will write on the top. Okay, like the target. This is the target upon the acquirer. 15 million is the acquirer. So we'll just take a calculation and do it. 10 divided by 15. So you get 0.66 or 67. Let's say 0.67 is to 1. So what does it mean? So first I told you how I look at it. When I look at this, I know that the target company is 67% of the acquirer. Means it is smaller. Simple. So now how do we frame the sentence? That the issuing company, the acquirer company, will issue 0.67 shares for every one share that you held in the target company. Okay, so this is how the sentence will be framed, 0.67. So how the swap ratio? Pay attention that the issuing company, so always the issuing company, the denominator company, okay, will issue shares, will be the issuing company, right? 0.67 we will issue for every one share that you had held. Why? Because we are bigger. We are bigger in size. So we will give you 0.67 of issuing company shares for every one share that you had held in the target company. Okay, then they will say that listen, it's not that one share I am holding these many number of shares, so I simply multiply by the ratio. So for example, they will come and tell you that how many number of shares we need to allot. So I'll ask that how many shares you were holding. So I was holding one share, then you get 0.67. But if you're holding 1000, then you get 670 shares. So shares held into the swap ratio. Learn this formula also, that if I have to calculate how many shares you will get, so you'll get 0.67 shares. Let's for every one share that you held. But if you already held 1000 shares, then you have to just simply multiply by the exchange ratio. So this is the formula that you need to learn. Number of shares to be allotted is how many shares you are holding into the swap ratio. Simple, sir, done. Now we look at another part where we'll see how is swap ratio applied in case of demerger. Now it's slightly different from mergers. Logic is very simple because in merger two companies are being merged. Here there is a difference as compared to merger. Here from the company itself a certain part or division is being divested or separated. So let's read and then I will explain you and I'll tell you what is the difference out here. So company XYZ is the parent company. It is demerging its subsidiary into a separate entity called as new company. Okay. So what is happening here? That we have company XYZ. Okay. And let's say it has three subsidiaries. Okay. Subsidiary A, subsidiary B and subsidiary C. Just like we had seen for your Reliance, separating a division called as Geo into a separate company altogether. So what happens? The company XYZ is the parent company. It is demerging its subsidiary, okay, into a separate company called as new company. Clear till here? So now if I was a shareholder, in company XYZ, let's say pre-demerging, what is the status? Let's say I am holding the share value and the value of the company is 100. Pay attention to what I'm saying. The value of the company is 100 and I was pretty much happy. The share market price was also 100. I was extremely happy. Now the company made a decision to split off a subsidiary into a new company. This company will be called as resultant company. So my value will be reduced by 1/3. So my value will no longer be 100. So I will be panicking because my value will now be, so 33% is split. Okay, 33 point, let's say if each of the subsidiaries is equal sized. So now my value here will be 66.67 because the 33.33% of the value has gone to the resultant company. So then we will tell the shareholders of the company XYZ that don't worry, this company is called as a demerged company. That don't worry, the new company will issue you shares. So then it will be matched. Now how much they should ideally give me value of 33%. Earlier when we used to do swap ratios, now pay attention to this, okay, very very important. Earlier when we used to do swap ratios, we used to put both the company's values used to be intact and we used to compare. Here what we are doing, technically this is called as entitlement ratio for demerger. Now we are doing demerger, pay attention, though it is written swap ratio, but ultimately technical term is called as entitlement ratio, where we look that how much of the value has been split. So I will be seeing here what is the value of the demerged company. So let's see, or demerging company. So the company that is being split, the value, market value is, market price is 50 and total number of shares are how much? 10 million. Okay. So here I can say the value of this company is how much? 500 million. Okay. Is the value of the company, of the big company. Now I want to know how much of it is being split. So the subsidiary company that is demerged, its value is how much? One share price of that company is 30 and they have 5 million. So this value of this company is how much? 150 million. Now, obviously, this is not going to be taken as a classical merger because from here only some value is being split. So I want to know the percentage transferred. How much percentage has been transferred? So I will say that the total value of this company is how much? 500 million. So this is the difference that we will do in swap ratio. We will try to understand that how much company has been split. For demerger, this is how you have to put. You will put the combined entity value, you will put the original company's value here, and so that is why it's called as entitlement ratio. To understand that how much you are entitled, so I'll see the percentage transferred. So it was 150 million, okay, so divided by 500, 500, okay, so we'll do the calculation. So how much does it come up to? 150 million divided by 500 million. Why we did it here? Because in demerger, this is how you have to do. In demerger, you'll put the market cap or value of, in demerger, you'll put the value of the demerged company, here, and here you'll put the value of the company that is being, how much of the company has been demerged, or we could say the value of the resultant company. So I come to know logically that if the company's value was 100 and as we had seen 33%, 0.33 was done, so I know 33% was split. Here in this case we came to know it is 30% has been split. So the swap ratio is 30%. Is how much? 0.3:1. That means here we will say that the new company, because obviously you were holding shares in the demerged company, one full share. Now what has happened, it has dropped down, that value of that share would have become 0.67 or 0.70 now, because 30% has been transferred. So we will issue you 30% worth shares. So then you will be same before and after. So the swap ratio will be 0.3, means that the issuing company, the new company, will issue 0.3 shares for every one share that you held in the demerging company. So remember this, that for demerger this will be the formula and the logic. I'll see how much percentage is being transferred. So 150 divided by 500, I come to know it is 0.3. So then we will say that, listen, 0.30 has been transferred, so 0.30 will be issued for every one share held. So the swap ratio will be 0.3 will be issued for every one share that you had held. Why? Logic is very simple, that one share was there, 30% has been transferred, so 70% value you hold, 30% we will do to keep it matched back. So then we will say it is intact. Clear? So for demerger, please note this change, because when you are doing mergers, the companies, both the values used to be kept. Now what is happening in the one company, from that only we are removing the other company's part, and then we are saying how much it will be issued. That is why the difference. And that the formula also I have explained you, that you understand the value transferred, that value will be given back to the shareholders. The number of shares, if you were holding, let's say how many shares you were holding, 1000 equity shares, then we will give you 0.3 shares will be issued, so 300 shares will be issued. Okay, logic is very simple. 100 shares were there, we will give you, and 1/3 of it has been split, so that much amount is being given back. Okay, so if you were holding 1000 shares, then swap ratio is this much, 300 shares will be issued. Okay, now let's look at another same example, same logic, that the parent company, now pay attention, you will understand what I'm saying much better now, that the Demerger, this is how you have to do the swap ratio calculation. That company X is the parent company. Okay, it is, let's say it is demerging its subsidiary company Y. So this is company Y. Let's say this is company A, company B, and they are splitting company Y. Okay, so now company Y will be called as Y new. So Y new is the new company. So now this B will be the issuing company. Obviously, when we had done the earlier swap ratio formula, it was for mergers. For demerger, what we have to see, how much value has been divested, how many value has been separated. So I will look that, listen, what is the value of the here for demerger, what will be the value? We will say value of the resultant company upon value of demerged company. Okay, so I will say the entire company's value. I will see that the big companies, just to understand how much percentage has been segregated, so that much we will be refilling it back, we will add the value back, so that you don't have a loss. So I will holding 70% here, 30% there. So let's see, the company X had 600 crores. Okay, company X is the parent company. Company X is the parent company. So we write the parent company details here. Logic also I'm explaining simultaneously. 600 crore is the parent company. Parent company. Okay. And the company Y is how much? 180. 180 crores is the resultant company. So now logically, how much percentage has been removed? So I will look 180 divided by 600. So when I do 180 divided by 600, I come to know that 30% of the company has been transferred. 30% of the company has been transferred. So now the resultant company will say that, listen, I know 30% of your value must have been dropped. I will pay for it. So every one share that you had held, I know that 70% you still have that value, 30% has come to me. So I will issue for every one share that you had held, I will issue you your lost amount back. So you are at the same position as before. So you will issue 0.3, the value will be restored, that the issuing company here will be the new company will issue 0.3 equity shares for every one equity share that you were holding in the transferor or the company X. So you were holding how much shares? One share. So then obviously that one share value after demerger must have become 0.7. So you are sad of how much? 0.7. 0.7. 1 has become 0.7. So 0.3 because it has been transferred here. So that 0.3 will be transferred. So then pre-demerger, post-demerger value remains same. That is what it is there. So if you go to see pre-demerger and post-demerger, from shareholder point of view, the value will be the same. Clear? And then we will say that how many shares you were holding. So you were holding 20,000 shares. So 20,000 into the swap ratio, 6,000 shares will be issued by us. With this, we've completed the swap ratio. For mergers, formula I have told you, for swap ratio for your, let's segregate it, for mergers and acquisitions, that is called as your takeover. And one is, the other one swap ratio is for demerger. Demerger, from that only the company is being split, so it's treated differently. Here it is always target upon the acquirer. Target upon acquirer. Okay. Here we look at how much value has been separated. So that value will be restored. So here we will see that what is the combined value, what is the demerged company's value, and how much part of it has been separated. Okay, demerged company is the total company's value originally, and how much part has been separated into a resultant company. So this you will come to know the swap ratio. Please note it down, and that is it. We've covered the entire topic of swap ratio. Thank you.